In this episode, I talk rural development loans. Welcome everyone to this episode of the AskJasonGelios show. I'm Jason Gelios, Michigan Realtor. Really appreciate you guys tuning in to this episode 177. That sounds crazy to say, but we've come a long way with these shows. Today we're going to be talking about rural development loans, what it is, and who qualifies for them, and what their primary, purpose is. But I have to ask you this because I ask this on every episode and practically every video that I do, and that's to follow me on social media if you're not doing so already. You can actually go below into the description and click on the link that you prefer. I'm on multiple platforms. If you're watching this on YouTube, hit subscribe and hit the bell so you don't miss out on future episodes, as well as in between videos that I upload. Oh, and also be sure to check us out on Rumble. It's a platform that I'm pretty much digging, and a lot of you watch from Rumble, so I really appreciate that as well. So let's dive into rural development loans, okay? So first off, what is a rural development loan? I put together some stuff here that I want to share with you, okay? So a rural development loan is a 100% financed home loan. That means you can go zero down, no down payment. It's insured by the United States Department of Agriculture, and it's designed to promote home ownership in less dense communities. So in layman's terms, the country, okay? Rural areas. Hence the name, rural development loans. It's a good option if you're buying your first home or if you're having trouble saving for a down payment. And so some of the things that I wanted to share is basically what actually qualifies a house for a rural development loan, okay? For one, the applicant has to, or applicants have to prove credit worthiness. You have to have decent credit, typically with a credit score of about 640 or higher. Again, consult with the lender in terms of that because it could be different. According to the United States Department of Agriculture, they say about 640 is what they look for, okay? And lenders that are approved to do USDA loans, which is another name. It's under the Rural Development Loan umbrella, okay? Adjusted household income is equal to or less than 115% of the area median income. So that's something to know, and a qualified lender will let you know about that. And the property has to be your primary residence. It can't be a second home. It can't be investment property. And also it has to be in a qualified rural area. How does this loan work? Well, USDA loan, which is another name for the rural development loans that follows under that umbrella. They're low interest mortgages with zero down payments. They're designed for low income Americans who don't have good enough credit. Although somebody with great credit, and I've seen this where people with great credit have also taken advantage of this loan as well. But typically it's designed for low-income Americans that don't have enough credit to qualify for traditional mortgages, okay? The home has to be in the qualified area, and every area is different, but it's easy to locate that information, okay? So somebody was actually asking me, I put together some other sub-questions here. Can you build a house with a rural development loan? And so I pulled this up because, to be frank, I wasn't too sure on that. And according to USDA, the funds can be used to build and purchase single-family homes, including eligible condos and manufactured homes. You can even pretty much buy a lot with the loan amount, okay? So that's pretty interesting. I had another sub-question, and that's why would a USDA loan get denied? And so I'm not a lender, but I'm gonna share with you what USDA states, okay? And they say things like not being able to verify your income, undisclosed debt that you didn't tell, right? Hence the name undisclosed. If you hid debt from the lender and then it pops up, or it pops up after you got pre-approved, or if you have too much household income in your area, that could be one too. You can make too much money for this type of loan. You have other factors. You have debt versus income, right? You have to have a certain amount of time at your job, right? You know, all the regular things that a lender would look for. I had a couple other questions here too. I want to share with you some great information. So somebody asked me, is USDA better than FHA? My opinion on it, my professional opinion on it, is they're apples and oranges because FHA has a different purpose. USDA is geared more towards those rural properties, to where FHA helps most first-time home buyers. And I've seen way more FHA than I have rural development. USDA and FHA loans both typically offer lower interest rate. Of course, that lower interest rate, by the way, comes being less risk to the lender, and the lender is able to offer that rate because it's government backed. Their money is safer. So you had it, and there's a lot more flexibility with that. So because of the mortgage insurance requirement, both USDA and FHA loans could be more expensive. So they come with mortgage insurance, of course. So that is really, in a nutshell, what a rural development loan is. Trying to see if I'd like to share with you some other stuff here too. You know, somebody was asking me, and actually this is the last question I got asked about this particular loan is, what kind of a house can you buy with the USDA loan, right? And so I'm gonna share with you what they say. They say, well, there's several types of home you can get with the USDA loan, but they have to meet the aforementioned eligibility requirements. Included homes, new construction, pre-existing homes, which is probably the majority of what that loan goes towards. And then like short sales, right? You know, if it's a short sale house, somebody doing USDA could buy it. Condos, I haven't seen many condos in the rural area, but they could apply. Townhouses and foreclosed homes. I don't see a whole lot of people buying foreclosed homes with a rural development loan just because, you know, let's be frank, it's, you know, if you're buying a foreclosed home, you're gonna have to have money to fix it up, in which I would say go with a FHA 203K loan, which that's a whole nother topic. So I hope you guys found this valuable. Be sure to visit my website, it's allabouttherealestate.com. There's a pop-up form that comes up when you hit the homepage, and you know what? You put in your information there, you can receive this video every week so you don't miss out. Otherwise, I'm Jason Gelios, Michigan Realtor, and I appreciate you guys watching, and I hope you have a great week. Thanks everyone for watching this episode of the Ask Jason Gelios Show. Be sure to visit the links in the description below to pick up your copy of my real estate book, Think Like a Realtor. It's a little book about buying and selling residential real estate through the eyes of a realtor. It's real world advice, tips, whether you're a new agent in the business or you are a home buyer or even looking to sell a home. This is great advice. So I really appreciate it if you guys visit those links, pick up your copy, and go ahead and share a review, good or bad, if you like it, if you hate it, okay? But get your copy today. Thank you.